rowing's an interesting sport because it's sort of the ultimate team sport. If you see a boat rowing by, you can tell if it's going fast or not, but you can't tell who the superstar is.
Welcome to Alt Investing Made Easy, where we explore the complex world of alternative assets. I'm Roland, a securities attorney, investment advisor, and your co-host.
And I'm Sarah, an investment advisor and corporate attorney, and your other co-host. We'll guide you through real estate, private equity, and more, making complex topics accessible.
Tune in for insights that empower your financial journey.
Let's make alt investing easy, one episode at a time.
Welcome everyone to Alt Investing Made Easy. Thank you for joining us today. Today we're excited to bring to you a new friend, Mark Flickinger with BIP Ventures. He's going to talk to us today about the offering for alternative investments that he has, and we'll hear more about Mark, his team and company. And also we're going to discuss a little bit the updates, recent updates to the accredited investor rules. So, Mark, thanks for joining us. It's really great to have you here today.
I'm excited to be here. Thank you both for having me.
Hey, Mark, welcome. Glad to have you here. And everybody, I'm really excited, from a business standpoint and what we've done on AIM so far, Alt Investing Made Easy, is we've focused a lot on commercial real estate and not so much information about the other asset classes. Private equity, we focused a little bit on oil and gas and haven't had anybody on that's a hedge fund manager yet, but today we're focusing on private equity. I'm really glad to make Mark's acquaintance, and I wanted to start out, Mark, just as we had discussed, to tell everybody that you're a heavyweight rowing champion from Princeton, and you were on the U.S. men's national team for rowing for a long time. And that just is super impressive to me. Sarah and I both love athletics. Our kids participate in athletics, and we continue to try to, stay in shape through athletics. And so that was one thing that we thought we might start with today, is just hearing about your experiences there. And then also, I think how that informs your current business.
Yeah, sure. Happy to. I have kids myself that rightly or wrongly, I've introduced them to sports, and now I have to stay in shape because I have to keep up with them as they're doing all their different sports and activities. But, I think a through line for me has always been athletics. As you mentioned, I was a rower in college, and then I rowed with the U.S. national team. Before that, I was basketball, soccer, you name it, I would try it. I wasn't good at it all the time, but I tried it. But, rowing was a great experience for me. I think rowing's an interesting sport because it's sort of the ultimate team sport. If you see a boat rowing by, you can tell if it's going fast or not, but you can't tell who the superstar is. Who's the best rower in the boat. Maybe with a keen eye, you could say someone's more technically sound than someone else. But rowing was great. I mean, I did do it for about 11 years, having rowed in college, as you mentioned, and then continued my pursuits in the national team for a number of years up through 2008. I guess I'm dating myself a little bit. But I think the importance of sport in general, but I'll just use rowing specifically, is that you learn all these things that you have to apply elsewhere, no matter what you're doing. Those things are a combination of, I can't get there by myself, and I need to work with a group of a team to get there. And so how can I make this team the best team that it can be, or how can I participate? But there's also a bunch of individual aspects to it where I'm expected to do a job, and can I do that? I've been in a difficult setting. Can I work on my ways to kind of challenge myself through that and get to the other side? And then, often everyone always talks about sort of the struggles, but I think it's important to know the successes too, right? When you've been involved in sport and you have those successes, you know what they feel like. It allows you to really believe that it's all worth it in the end if you kind of get to where you are. And then I think the final one for me is, it's an interesting one. I was fortunate enough to row for the U.S. team for a handful of years, but came up just short of the Olympics in both 2004 and 2008. Mm-hmm. And, that for me was kind of, at the time I was younger, failure on a grand stage, right? I mean, that was sort of the first time that everyone at home, I grew up in a small town in Western New York. Everyone knew that I was trying out for the Olympics. And, for me, it was like, man, I totally failed. And I woke up the next day and everyone treated me the same. They're like, that's so cool that you did that. You're still Mark to me. And they didn't use those words. Mm-hmm. But I think for me, it was great to say, it's really not to fear failure, but to really pursue better is kind of a mantra that came out of it, which was like, I didn't, for a while I was like, I don't know what failure feels like, but I don't want to feel it. So I'm just going to keep going. But, that was, at least to me, was failure, right? I mean, when I realized, as most other people would say, well, even myself, if I knew that at my 18-year-old self that I was going to do that for 11 years and I travel all over the world and I get to do these great things, I would have been like, sign me up, But so I think the end of your question, sorry for the long-winded intro, but
No, it's great.
It's
the end of
great.
your question was, what do you take away from that to then apply into the world that we're in today? And I think all those lessons, the last one being certainly pertinent, is everyone is kind of pursuing better, particularly in the space that we're operating in. For your listeners, are trying to invest in a better way so they can get a diversified, perhaps, appreciation and value, et cetera, et cetera. A lot of our entrepreneurs are doing the same. We are trying to do the best we can do and modernize. And along the way, you're going to run into some failure. Along the way, you're going to run into the need to work as a team to get to where you need to be. And along the way, there's going to be some times when you're by yourself, right? It's sort of like the only one that's going to get there is me. And I think sport in particular has taught me and many others all those different pieces and parts where you get in a relatively risk-free, it's not risk-free, but relatively less risky environment, kind of build all those muscles and hone on those skills to be successful.
Mark, that's just really great. By the way, Roland has a daughter who's also pursuing her soccer dream, and she's going to be the goalie at Tennessee next year.
That's awesome.
Yeah, she's so it's nice to see also that the sports carries through the university for a lot of kids now. It's so it's good. I wanted to ask you, thank you for that. And maybe we can get back to discussing some of that more later. But in terms of your company, I want to give you, make sure we have enough time so you can tell us about BIP Ventures. I know you're involved in that with some other people. And from what I know, just from reading some of the articles on your website, which were written by Rochelle and very, very interesting, you have a sustainable approach in the sense of you have a long-term view. You invest with a long-term view. And so just in your own words, I'd love to hear about who BIP Ventures is, what is your ethos, and then maybe we can get into details about the specific offerings that you have for investors.
Yeah, sure. Thanks for that. BIP Ventures, we've been around. We're based in Atlanta. We've been around for over 15 years now and have a track record of success across our anchor funds that kind of put us in the top quartile relative to other funds launched in the same vintage. But that doesn't mean we've done it the same way as everyone else. We're kind of different by design, one of our taglines. And we really have been built on the high net worth investor, the individual household, advisors, their clients. And I think if you go at it that way, that's a great opportunity. I think we don't have to rehash all the sort of values of the private markets here and how difficult the public markets can be, particularly given where we are today. But I think private markets should not be just reserved for institutions and kind of really large single-family offices. They're really necessary now in order for everyone to have access and feel comfortable with accessibility with alternatives. So, when we started, we really had the individual in mind, and I think in many ways that's not only it's kind of crystallized our investment philosophy. We don't look at ourselves as we invest as a seed stage, or we're a Series A investor, or we're a growth equity investor. We think about it more as like a modified option strategy. We like to find really promising companies early in the spaces where we feel like we have a right to win. So those specifically are B2B software and tech-enabled service businesses in the areas where our general partners have expertise, healthcare tech, fintech, insurtech, et cetera. We like to find these promising companies early. We'll invest in them where it's smaller amounts of capital earlier in a company's life, and then we work with them closely to help them build the business. We don't expect the whole business to be built when we invest as a Series A investor, typically first institution. We partner them with our investment team, our performance engineering team. And as we work through those challenges and we start to have value that gets created in these businesses, we are more than happy to then fund them again, and then fund them again, and then fund them again. And I think the advantage of that strategy is it kind of breaks the mold of like you fit in a neat box in terms of where in the investing spectrum you are, like Series A, Series B, healthcare tech, seed, whatever those neat boxes are. It breaks that mold, but it ends up being a win for all parties. So from an investor's perspective, we're able to then tilt the scales and concentrate on the ones where we have more information about and where we're winning. From an entrepreneur's perspective, they're finding a partner that can stay with them for a longer period of time as long as they do their job. From a GP, if our investors are doing well and our entrepreneurs are doing well, it makes it easier for us to do well. We're sort of in the middle of the two. So we think of it as this sort of modified options or multi-stage approach. We may invest in 10 companies early on in a fund's life with the expectation we're going to follow on as many times as we potentially can to continue to hit our return hurdles. And I think that strategy or that ethos, as you mentioned, or philosophy has really put us in good stead. You don't have these, I call them traditionally like the power law of venture, the traditional venture investing, where it's like, we're going to swing for the fences 10 times and hopefully one of them hits. That's not a great place to be. If you're an advisor and you put your client in this product and the first 9 that come back are not hits, right? And then, hey, just hold on, this last one's going to be a grand slam and we're going to be really excited we're in this fund. That's a pretty risky way to deal with, I think, individuals' capital. And so we've always kind of had the individual household in mind, recognizing that there's a better way to increase your batting average and your performance just through the structure of how we make our investments.
Thank you. Roland, sorry, I don't know if you're going to say the same thing. I'll say one thing and you might have the other. Just, we talk about on our webcast this idea of democratization of capital, and we're very focused on what is an alternative investment, what are private securities, and that's what you've called the private markets, which is, great. And I think exactly what you're saying is what is an essential theme that we've pursued so far, and that is that there is a need for people to be able to access these investments. And we're going to talk maybe in a little bit about the qualified accredited investor rules and that kind of thing. But to be more general, the first step is knowledge of the existence of private markets and that there are active and very good players who can give you returns or can make investments just like you're saying without this sort of maybe gambling approach that sometimes is a stereotype about venture capital. And that's what you're calling, I can't remember the term that you use, but that's what you're calling the batting for the fences example, right? Which is kind of like the power law. Yeah, exactly. So that's what you're talking about there. So I just wanted to observe that when we earlier spoke with Rochelle, we noticed that it seems like we share some common ideas already, even though we're just getting to know each other. And I really appreciate the way that you just explained all of that. I think for anybody listening, that makes it very clear what you're doing here.
Well, the thing that jumps out at me, and this is would be a good explanation again for people that are becoming accustomed to the asset class. Your background personally, Mark, like you develop a real credible plan for each of these companies that you invest in. You're active in their growth. You get involved with their management, their operations, and that comes from your background, not only as an operator of a successful company yourself, but also as a consultant that advises companies about best practices in early stages. It looks like is where you're really focusing. So I think that would be a great place to hear more about, your background and how you got into this. And it's that classic question that, what qualifies you to do this, Mark?
Yeah, it's a great question. I mean, you mentioned we believe in sort of we're builders of businesses, not buyers, and we're not trying to take the entrepreneurs. They're the one, right? They're the star of the show. They're the one that's, I say this lovingly, irrational enough to go solve the problem, right? They said, I'm going to go. This is a problem I see. It needs to be solved. I'm going to be the one to go solve it. But we recognize that first-time founder, it doesn't matter if you're a first-time founder, fifth-time founder. You're going to have some skill set that's unique, right? Whether it's writing software or the intricacies of this physical space. But in order to build a business, you need all of those solutions, right? You need someone that's really good at marketing and sales and finance and et cetera, et cetera. And so our intent along the way is to really come alongside these entrepreneurs, meet them where they are, help them build out those things around kind of financial metrics. Are you tracking them at all? You should be tracking them. Which one should you track? What do they say? That helps you figure out where to put fuel, where you should put fuel on which fire. Go-to-market motions are a critical one. Don't just because one person don't go build a sales team of 50 people and expect everyone to buy. Like, let's make sure that we really have a product market fit. We know who our customer should be, not just could be. And talent is a big one. How do you have at least one talented person? You may have three, but you may need five. And so kind of working with them along the way. I think from my perspective, back to your question, I've always been an operator and a builder. I've never been great at coming up with the idea, though, admittedly. I mean, I've never been the one that's like, I'm going to go, this is a great idea for business, I'm going to go pursue it. I'm more along the lines of someone else identifies what it is, and I can come alongside and help them make it better. So you can kind of see a parallel there where we sit together. But I've always been on the operating side of things. I think in venture capital specifically, you kind of come up the operating side or you come up the finance kind of investing side. And to be good, you need to do both, or at least you need to have both represented on your team. I've been more of an operating person where I've just been in positions where I've been fortunate enough to try and build things that haven't been built before, solve problems that kind of haven't been solved before, either inside big companies or as a part of a startup or a smaller company, and kind of from my track record perspective. And I just love this ability to, you sort of pinch yourself, but I get to help build our business in and of itself, BIP Ventures as it stands. But I also get to help all these other entrepreneurs and have exposure to them, helping to them to build their business. And I think in some ways that's a screen at the front end. You're trying to get to partner with someone that wants to be partnered with, right? The joke is like, you want to be the king of a grape? Like, do you want all of a grape or do you want a smaller piece of a watermelon? And like, I don't know. There's some people that like being the king, right? They like to have the whole grape, and that's fine. There's nothing wrong with that. But we prefer not to. I don't want to get in the way of your king of the grape scenario. I'd rather partner with someone that's really trying to build something that's much bigger, like a watermelon. And collectively, if we do that well, everyone should do well.
That's a really good analogy.
Yeah, it's great. Very Southern. Grapes versus watermelons.
Born in New York, right?
And you've grown a little bit of Southern in you in Atlanta. Yeah. Although I guess we don't grow grapes, but no. What I wanted to say is that I think it's really good to emphasize what you're saying here, which is this approach creates stability and predictability, so that when an investor comes and gives you money to put into your fund, that the business of this fund is this exact scenario that you're talking about. It's good to understand in detail that somebody is there watching the whole time. And this is what we always hear from other people who come on in different, parts of the alternative asset space. You need to know the management. You need to know the people involved. You don't want any surprises later. You need to stay involved. And so essentially what you're doing is, in this asset class, venture capital, which naturally has some uncertainty because of it's developing new projects, new ideas. Not every new idea ultimately works, but you're giving it a lot of energy and resources so that if it's going to be successful, there's a much higher chance. And I think that's really critical to understand about your products that you offer to investors, because it mitigates this anxiety that people might have about venture capital and early stage companies, et cetera, et cetera.
Yeah.
Go ahead, Mark.
Well, I think that, people who are new to the space, there's kind of one tail is it's really a risky space, right? To your point, Sarah, we're building new companies, and so it's a risky space. And to the other side, it's like cool, depending on what you watch, it's like a cool space.
Oh, that's true. Shark Tank.
And I think, in many respects, it can be both, but it's kind of gritty, right? We're in the trenches trying to solve you're selling to the wrong customer, and it's a slight shift, and it's expensive. There's the whole kind of gritty things where you're rolling your sleeves up. I think knowing who you're partnering with as an investor, our investors hire us to do that work, right? And there are investors out there that have access into the ecosystem, what I would call direct deals. We're like, hey, my friend's friend is starting a company and you should put $25K into it, or whatever the case may be. It's really hard for someone who's not trained to do the job to know which one of those 25K is going to be good or not. We have a whole team of people that do it for a living, and we're not going to get them all right ourselves, right? And so I think for someone trying to get access into the space, alternatives in general, you think of the firm that you're putting your money behind as the people you're hiring to go do all that work for you. And you should be somewhat aligned in terms of what they're trying to do, what they're investing in, what their track record is, how they operate, et cetera. So I think, we use the phrase managers matter. What manager you partner with, you don't need to do all the diligence on the company, know every in and out of it, because in many ways, just like you're hiring your doctor to do some procedure. If you need to get your knee scoped, you're hiring someone that's a specialist in getting your knee taken care of. You're hiring someone as a GP, general partner, to do that for you. But there are a bunch of different ways to skin a cat, and there's a bunch of different ways to do that. And I think it's worthwhile for people to ask those questions to say, why do you win? Is your investment process repeatable? Is there the right people on, there's just some basic questions you can kind of feel comfortable with what the expectation is. And, just to finish the thought, Sarah, that we feel like we have a lot of experience because we've done it a lot, either as operators in businesses that are now on our team or collectively on our team. We've invested in over 100 businesses. If we got the right partner on the other side of the table, they would want to know, what should I avoid, right? Like, what have I done? What should I avoid? How can you help me be more efficient with this capital to grow on scale? And that's kind of the impetus behind this performance engineering team that works so closely with these companies.
Well, my mind kind of has gone to maybe a specific example, Mark, of a success story that you all have had. And not only just, we made 26% IRR, but specifically the things that you did or the ways that you contributed beyond just writing a check to one of the companies that you invested in.
Yeah, there's a lot of them. There's some that didn't work out, but there's a lot of them that did work out. We mentioned sports at the beginning. So I'll talk about one of our existing portfolio companies. The company's called Play On Sports. We're still invested in them, and they have formed what's called the NFHS network. So the National Federation of High Schools Network. That's a joint venture between Play On Sports and the state high school associations. And it's similar to the way that the Big Ten network or the SEC network have been formed. It's a combination of rights going in one side and kind of know-how and distribution on the other side. But it's in a high school space. And so the founder of that business, based here in Atlanta, worked for CNN, a guy by the name of David Rudolph. He started actually going after the college space. This is called 15 years ago. He said, I can't see my Georgia Tech Yellow Jackets. I'm going to build a over-the-top solution to be able to watch them. As he built out that technology, obviously that got replaced by over-the-top solutions to see colleges. And that's kind of the vast untapped resource, but really, really spread out as high schools. And so he kind of took that technology and that solution and really put it in the high school space. And the underlying thesis there, the sort of industrial logic that people wanted to watch either their own kids play or their niece, nephew, grandkids, et cetera, is just so robust. And so then it was just a matter of how do we aggregate it, access it, et cetera, to get to where we need to go. And, there were bumps along the way. We worked closely. Obviously, we had to be there from a funding perspective when things didn't go quite as quickly as we wanted to. But the story I like to tell is that the distribution is the challenge there. You can build a relationship. You can figure out a way to get people to buy a subscription or a day pass or whatever the case may be to watch a particular game. But actually filming the game and distributing it has always been the real difficult challenge. So early on in the life of the firm, they were relying on students to go record and broadcast the shows, put a bunch of money behind marketing for one particular show. And then lo and behold, on Friday night, Steve and Susie, who had been dating that morning, are no longer dating each other, and they don't show up to broadcast the show. And suddenly we have all these irate customers that were trying to watch their kids on Friday night, and there's no one there to run the cameras. And so, with our team, just to use a simple example, we looked to find a way to do this in a more efficient way and found an automated production machine, and then work with them to figure out how to bring enough of these in and distribute them out throughout the high schools. They're now in, I think, about 12,000 high schools for the streaming product. And all of those are automatically produced, right? So you just run into these challenges. If you think of that arc of that story, we're going after football games. Then we're moving to the high school space. How do we aggregate the high school space? How do we distribute for the high school space, et cetera, et cetera? The challenges they run into today are different than the ones they ran into before. But having a partner that has experience and capital and really believes in kind of the underlying thesis that we're going after, I think is critical for an entrepreneur to ultimately get to a place where it is successful. So
that's cool.
Yeah, for sure. Very hands-on, practical, operational counsel and advice that you gave them, and that's awesome.
So we've now, I think, just being mindful of time, Mark, and trying to work on keeping our episodes in this sweet spot so that it's more possible for people to watch them. But tell us, that you have these funds that are available to accredited investors. Do you want to tell us specifically about the funds that you have available, that because this episode can work as an advertisement for you about if people want to contact you and are interested in what you're offering?
Sure. Thanks for the opportunity. I mean, we're really excited. We built a fund. As you mentioned, it's for accredited investors. So your sort of traditional private equity, growth equity, venture capital fund, it's typically a 10-year fund. You have to get in when we're raising, and it's limited on the number of slots that the SEC allows us to have. So if you have less than $5 million to invest, which is a meaningful amount of capital, it's somewhat unaccessible, right? We only have 100 slots below $5 million. It's a $250K commitment. And, we're talking about I'm going to put an eighth of my network with someone that I just met. It doesn't quite fit. And so we really set about building a product that fits better with the individual or the household and their advisors, where you could take the same investment philosophy and strategy and team that's been kind of exercising over these past 15 years with consistent success and put it in a better wrapper that's more successful for everyone. And so recently there's been a lot of rise in what's called an Evergreen fund. And the other one that's arisen is a BDC, or a business development company. We took those two concepts and actually layered them together to build a thing that would allow our investment team to continue to operate the exact same way they've done before. We don't want to change that because that's working. But now with that kind of things, we have an Evergreen fund, meaning it's always open. There's a close at the end of every quarter. And the threshold, as you mentioned, is no longer 5 million or above. It's now accredited investor. The kind of easiest way to do accredited investor is $1 million of investable assets, or $200K made by you individually in a year and expect to continue to do so, or $300K for you and your spouse or your household member, again, and expect to do so. So not to say that that's everybody, but it includes a much broader group of people than the earlier hurdle. And because we have an unlimited number of slots, we can lower the minimum. So that minimum now to access in this, what has historically been top quartile performance, is only $10,000. Right. So again, it's a commitment, but you're now at a $10,000 level where you can participate in this. And the other feature that I think is really neat is 100% of your committed capital is due at the time of close. So if 10,000 is your number, if you're thinking of your portfolio and I say this little slice, I want $10,000 to be my number, all 10,000 gets called at the time of close, deployed over the next 90 to 100 days, that next quarter. And then there's no more commitment from you. There's no us calling at the wrong time because it's tax season or it's the holidays. So you get to make a new decision every quarter whether I want to add to my position or just sit where I want to. And then actually starting next year, we'll start being able to have a liquidity feature where you can get out one time per year. Right? So it really takes the power of this product. One, lowers it, makes it more accessible to everyone because we have an unlimited number of investors. And then you really can use the product to the way it works for you. I will say, it does take time for value to be created. This is not I'm in and out of funds, and this is our holds are typically about 6 years on average with a company. And so it will take time for value to be created. But now you have this thing where I can have a diversified portfolio. I can dampen volatility. I can potentially increase performance by being exposed to this asset class. And I can do it in a way that makes sense where, if I get it, let's just say I had a bonus check or I had some capital come in because I sold something, you could participate that quarter and then, wait until you're ready to do it again in the future.
I think that sounds really good.
And I think, for any investor that's interested in getting exposure to this asset class, it's a very minimal commitment that's required from them. But what we found so frequently, you hear this all the time, is that you never pay attention to something so closely as when you have an actual, dog in the race, so to speak. Once you make that investment, you can really learn so much by keeping up with the developments. I know that Mark, you and your team will take your disclosure obligations, continuing disclosure obligations to investors seriously, and it would just be a wonderful opportunity for an investor to go along for a ride where they really have a chance to learn about how a private equity firm can add value.
Yeah, it's great. It's interesting you mentioned that. So those funds, in order to use that structure, they actually need to be publicly filed. So the fund is called BIP Ventures Evergreen BDC. There's a BIP Evergreen Funds website that you can go to get more information.
We'll have all that in the chat below.
Oh, great. So it's publicly filed. And the reason that's important is it just gives you that transparency that you mentioned, Roland, where we have 10Qs, we have 10Ks, we have to file 8Ks, 4Ss. So there's just this higher bar of transparency and accessibility from an investor's perspective. In those filings is the portfolio. You can see what's going on at each one. We host webinars on a weekly basis so people can tune in whenever they want to and hear what's going on, kind of the latest and greatest from a webinar perspective. So I think it is a great way to, either dip your toe in the water or you're familiar with what you're doing and maybe it's your whole foot. But it's a great way for people to access the product and then learn as we go. To your point, you're learning as it goes at a much smaller amount than some of these other funds. And if you like what you see, it's easy to increase. And if not, then we'll do our best to perform and try and get you next time.
Thank you for that, Mark. I think it's just very clear. And I think one thing we think about when we think about this alternative asset space is this accredited investor test and the rules that you have to follow by. There has been a development lately, and Roland, I don't know if you want to provide the specific citation.
Yeah. And it's the no action letter, right? In understanding what the no action letter means is it's a ruling by the SEC. You can write into the SEC and say, hey, given this set of circumstances, how are you going to enforce the laws? And what the person that was requesting the ruling asks is, if we make our minimum investment amount $200,000, could we just presume that an investor is accredited if they also certify to their status? But this is really important with respect to the 506C offerings that allow for advertising, because in this instance, this would be the way the minimum offering amount essentially is the way that the investor gets verified. And you brought this up at the beginning, Mark, and it's something that we've talked about before, Sarah, this notion of democratization of capital. This is the goal of our podcast here, is to expose people to a sector of the market, investment opportunities that ordinarily you wouldn't know about. You can't log into your online brokerage account at Schwab and find out about, certain things. Maybe, Mark, your product, if it's publicly registered, then, that would be available there. But many times, they're not. But I really think that there's this trend that the SEC maybe at some level really does want to allow for a wider audience to be eligible to invest in these private securities deals.
Yeah, I think so. And I would like to hope so as well. The public markets kind of at the turn of the century, there are about half as many companies now as there were then. But that doesn't mean that we have less companies, right? There's just all this innovation that's happening in the private markets. And so, being in a small cap public market space doesn't have the same returns that it did even in the early 2000s. An interesting stat that we use is, of all the companies in the United States that have $100 million of revenue or more, so it's a pretty mature business, $100 million of revenue or more, only 13% of them are public.
Yeah.
And I think that the SEC is recognizing that the rules that they put in place literally decades ago that were intended to protect people from being taken advantage of are now preventing people from really participating where all this value creation and innovation happens. And in many ways, the driving force of our country, right? The sort of economy and the innovation and the ecosystem that continues to push us to the forefront from kind of growth of GDP, et cetera, is happening now in a space that most people can't participate in. So yeah, I'd like to say that we're going to get to a point where there's sort of progress being made there where more and more people happen. I think everyone on, I'll just say on my side of the table, have recognized it's such a massive opportunity. We're talking trillions of dollars of people that want access into the private markets. And so it's on us to use the tools that we have today to make structures that are more available, like the ones that we talked about already that we've built. So I do think it's coming. This democratization is coming. I think with that, there always is risk. Not every firm is built the same and the strategies are built the same, but I at least like that they did that, right? The no action letter that you mentioned does take one hurdle away where you can say, just by the mere fact that they're willing to commit $200,000, therefore determines that they're an accredited investor.
Thank you for that. And I think it's just so interesting listening to you talk because we're 32 episodes into this webcast. It's early days yet, but everything you just said aligns and actually validates things we've said already. So it's really nice to hear it from a professional and experienced person such as yourself.
Well, thank you. And it's been great being a part of it. And you guys are also experienced and professional in your own way, so I'm not surprised. But I'm happy. I think you said it earlier. We do have sort of similar ethos in terms of how we see the world, how it could be, and also perhaps should be.
Yeah, exactly.
Well, I see we're kind of at our time, getting close to it. Mark, before we sign off, is there any parting thoughts or just anything that we haven't touched on that you really wanted to make sure we expressed?
I mean, I think general plug for the private markets. If it's not with us, I strongly believe that everyone should pursue it. I mean, you guys do too. And I think there are a lot of different ways now that didn't exist years ago for you to do your homework. But find people like yourselves who are hosting podcasts or get educated in this space. And I think dipping your toe in now is really important because you're going to really want to be in participating in the future. So if it's not with us, I think do it with someone. I can't kind of stress that enough in terms of just long-term success for you as an investor.
Okay, well, that's great, Mark. We really appreciate it. And I would say, Sarah, what do you think? Does that sound like a good place to
Yeah, why don't we wrap things up? Yeah.
Okay.
So thanks so much, Mark, for being here. And thanks to everyone for watching our webcast here on Alt Investing Made Easy. Please like and subscribe.
And remember, everyone, take aim with your alternative investing strategies.
See you next time.
And we'll just smile for the camera to get some stills.
Okay.